The XRP ledger is dead. Banks will not use XRP. XRP will not be used for cross-border payments. There will be no mass adoption. Now, these are some of the comments that I see every single day from people in the XRP community responding back to videos. So what I want to do in this video is I want to address some of the biggest concerns that people in the space have, such as XRP's on-chain metrics. We're going to dive deep into the analysis and have cross-chain comparisons to other leading layer ones in the space to discuss the hype versus the harsh reality for the XRP ledger, because the XRP ledger is often positioned as an enterprise-grade blockchain for financial institutions, yet its current on-chain metrics reveal challenges in gaining adoption according to some data that we're going to cover in this video. So here are some concerns brought up about XRP. So let's break down the raw data and compare it with other leading blockchain networks. So feel free to share your thoughts in the comments below. Let's run it. All right, bull runners, welcome back to the channel. So there's a lot of skeptics out there about XRP, and arguably so because of on-chain data. So we're going to talk about the metrics in February alone. When I'm recording this video, it's February 27th. So the daily activity in February for payments, for number of payments from one account to another for XRP, was roughly 450K to 900K daily. In terms of transaction volume, that's about 900K to 2.6 million daily. And in terms of XRP payment volume, it's roughly been 200 million to about $1 billion daily. And in February, it peaked out at about $2.4 billion. And if we look at the number of active accounts in terms of unique senders on the XRP ledger, it peaked out at about 105K in December, and it's now declined to under 40,000. So here's some key observations and arguments within people in the XRP community. Number one would be declining payment volume, because if we look at the XRP payment volume from one account to another, if XRP aims to facilitate institutional and banking transactions, yet its volume is trending down, this is what's been concerning crypto investors looking into XRP, since macro market conditions shouldn't significantly affect institutional settlement layers, right? There's been a diminishing user engagement for retail traders and investors on the XRP ledger. Also, when we look at burn rate versus inflation, the burn mechanism is negligible compared to the 1 billion XRP unlocked per month, making the deflationary impact almost irrelevant. Now, when we compare XRP to other leading blockchains like Solana, Ethereum, or even BNB, we can see that the transactions in February from low to high, well, the XRP ledger has had roughly 900K transactions as of February 27th to about 2.6 million at the peak in February. And in January, it got a little over 3 million. Whereas if we look at Solana, we can see the transactions per second on the 25th were about 4,300. Now, you have to take that in terms of seconds and multiply that by how many seconds there are in a day, which is 86,400 seconds in a day. So if we take 86,400, multiply that by 4,300, on the low end, we get about 360 million transactions to about 415 million on the high end for February for Solana. Now compare that to XRP's 900K to 2.6 million, 360 million to 415 million is a drastic difference in transactions. Now, when we look at Ethereum, the total transactions for February 26th was about 1.2 million. So on the low end, about 1.1, on the high end, about 1.4 for the month of February, which is more comparable to the XRP ledger. If we look at BNB, we can see total transactions on February 2nd was about 4.2 million. So BNB is roughly 3.7 to about 7.5 million per day at the peak in February. Now keep watching to the end of this video, and we're going to get into why is Solana's transactions so much higher than Ethereum, BNB, or the XRP ledger. So hang tight, you guys are going to absolutely love this video. Now let's talk about stablecoin transfers in February, because to truly understand adoption on chain, we would want to understand stablecoin volume, right? Well, if we look at the daily average here, the data isn't as transparent for the XRP ledger, because on xrpscan.com, we can see things like number of payments from one account to another, number of transactions executed, XRP payment volume from one account to another, or even number of active accounts, but it doesn't necessarily show stablecoin transfers specifically. But if we go to artemis.com, we can see this data for Ethereum, Solana, BNB chain, and other popular blockchains. So, for example, the XRP ledger payment volume is roughly $200 million to $1 billion daily. Now, that would assume that stablecoins are included in that, so the stablecoin transfers is less than $1 billion daily. So a fraction of the 200 million to 1 billion would account for stablecoins. Now, if we look at Solana, we can see it's 9.9 billion in stablecoin transfer volume for the day. So we'll round it up to about 10 billion. We can see Ethereum is at about 40 billion and BNB, or the Binance Smart Chain, is at 4.4 billion. And if we look at active addresses on chain, which shows how much user activity there is, well, in the upper left, you guys can see that as of January 28th, the active accounts was 40,000. And since the dip in February, the number's most likely less than 40,000 from now. So once this updates for February, we'll see the true data, but it's most likely less than 40K, which is staggering considering Solana's daily active addresses is 4.3 million. So under 40K versus 4.3 million. That's a drastic difference. And this is one of the main arguments that people who trade on Solana versus XRP, or they believe that Solana is going to gain more adoption than XRP because of the daily active addresses. Also looking at Ethereum, there's about 409,000 daily active addresses. And then looking at the BNB chain, there's 1.1 million. So here are the key takeaways that we need to talk about from this XRP on-chain data in comparison to other chains like Ethereum, Solana, and BNB. Number one would be low stablecoin usage. While ETH, SOL, and BNB move billions in stablecoins daily, the XRP ledger's transaction volume lags behind significantly. In weak transaction throughput, despite XRP ledger's advertised efficiency and high transactions per second, other chains process significantly more transactions per day. Example, Solana's 415 million versus XRP ledger's 2.6 million. On top of the limited active accounts, with Solana and BNB having well over 1 million daily active addresses, while the XRP ledger struggles to maintain above 40K, XRP is drastically underperforming in volume and adoption compared to the top altcoins on chain. So declining transaction volume and active accounts indicate weak growth. So what are your guys' thoughts on XRP Ledger's future? Can RLUSD, their stablecoin, turn things around for XRP and Ripple? Drop your thoughts in the comments below. Now let's get into the response to all of the on-chain data. And if you guys want to read this Twitter post that I just made on BULLRUNNERS HQ, feel free to follow us through the link in the description below on Twitter, because XRP Ledger struggles with adoption despite its enterprise focus. So this is a fair point because metrics definitely do matter. Men lie, women lie, numbers don't lie. So let's break it down step by step and let's offer a perspective that most retail investors don't see. All right, you guys ready? Let's dive right in. So number one would be the XRP Ledger's on-chain metrics. The claim is that the XRP Ledger's transactions, payment volume, stablecoin transfers, and active accounts lag behind Solana, Ethereum, and BNB, exposing adoption struggles. So what we need to first do is differentiate adoption versus dilution and what actually drives mass adoption. So keep in mind that all through February, since February 1st, Solana's market cap has dropped over 40%. And if we measure from the 19th of January, it's dropped over 54, almost 55%. Ethereum has dropped over 20 to 30%. Even at that massive wick, it was like 37% to the downside. And the Binance Smart Chain has actually done a little bit better. It was down 26% with that tariff wick down here by the 3rd of February and bounced all the way up to $104 billion in market cap and, is down roughly 19 to 20%. Whereas XRP has dropped from about 170 billion in market cap to about 126 billion, so about 20 to 30%, similar to BNB. Now, this is super important to know because a lot of the on-chain data is showing sell volume and liquidations from retail traders getting wrecked on different meme coins and other low market cap altcoins on those chains like Solana, Ethereum, and BNB, and even the XRP ledger as well too. But here's the drastic difference. Look at the total amount of altcoins on each chain. Solana has over 20 million tokens, Ethereum over 1 million tokens, BNB chain over 4 million tokens, and the XRP ledger is well underneath 1 million tokens. I think it might be like a few thousand or maybe a few 100,000. And if we go to DeFiLlama.com, we can just see the total value locked for all chains is 97 billion. Ethereum is about 50 billion. Solana is about 7 billion. The Binance Smart Chain is about 5 billion. And the XRP ledger is only 80 million. Nothing to even blink at, right? In terms of protocol rankings, it only has Open Eden at 5 million, Doppler Finance at 2 million, and then So Value Index is at $109, and then Sologenic. So this is massive because on-chain volume, like the 200 million to 1 billion for XRP Ledger Daily, compared to Solana's 10 billion or 40 billion for Ethereum and 4.4 billion for BNB and stablecoin transfers, captures all blockchain activity, not just buy or transfer volume from altcoins. So this includes, number one, trades, that's buying and selling on DEXs. So like Uniswap on Ethereum, PancakeSwap, Binance Smart Chain, Jupiter, or Radium on Solana. So for example, on Solana's chain, you not only have to take Solana's buy or sell volume in terms of the on-chain data, but you have to look at the top meme coins like WIF as well too. Look at WIF right here since November 2024. Look at how much it's dropped. It's down 87%. Even in the month of February, this thing is down over 55%. So if we look at the market cap chart on coinmarketcap.com for Dog with Hat, it was over $4 billion in November, and now it's sitting at $500 million. So about $3.5 billion has been wiped off the market cap for just one meme coin on Solana's chain. So when we look at the total volume right here on chain for something like Solana, that factors in as well. And we'll get into this in a little bit in terms of differentiating adoption versus dilution in terms of how many altcoins there are on each of these chains, like the 20 plus million on Solana versus under 1 million for the XRP Ledger. So the goal here is to never have a bias. We need to look at things objectively, and we also need to look at the facts. So number two would be transfers, moving tokens like stablecoins between wallets. If someone were to sell a meme coin like WIF and transfer the stablecoin, whether it be USDC or USDT, wrapped on any of these chains to another wallet, that counts on chain. So during the recent market dip, with the majority of millions of cryptocurrencies selling off on these chains and people transferring stablecoins, it's not necessarily an accurate representation, in my opinion, of mass adoption, because it's really been a meme coin casino over the past year, where retail's come into the market and they've just bought anything with a dog name on it because they saw what happened with Shiba Inu, they saw what happened with Dogecoin, and they just don't want to miss out on the next 100x meme coin. So number three is smart contract integration, like DeFi staking, NFT minting, etc. This is where Solana, BNB, Ethereum has put hyper focused on to attract retail investors. And so number four would be stablecoin movements, payments or swaps like USDC, USDT, or other stablecoins. Those are just the two most popular ones. Because Ripple's stablecoin RLUSD is so new, its market cap is much lower than USDC or USDT. So for Solana, for Ethereum, for the BNB chain, and other layer ones with their millions of altcoins, 25 million plus respectively, it's absolutely insane. If you go to coinmarketcap.com, you guys can see in the upper left, they have 11.98 million listed on here, but there's so many more that aren't listed on CoinMarketCap that you can find on like Dex Tools or Dex Screener, and even some that aren't even listed that are up on like Pump Fun or other Launchpad websites. And that's where we call the trenches if you're hunting for the next 50x or 100x gem. So with millions of altcoins selling volume from these tokens, and all of the tokens on chain contribute massively to on-chain data. So during February's market drop, retail sell-offs of meme coins and low-cap altcoins likely spiked volume, especially on Solana, for the 10 billion stablecoin churn and Ethereum's 40 billion. And with blockchain explorers like DeFi Llama, Etherscan, BSC Scan, they aggregate this activity and they don't break out specific like sell volume from, let's say, Dog with Hat on Solana or a random BEP20 token separately. It's baked into the totals. So yes, the 25 plus million altcoin sell-offs are tracked within those figures, amplified by February's crash, but they're mixed with buys, they're mixed with sells, transfers, and other DeFi noise. So this is where dilution comes into effect versus adoption. The industry does not need millions of altcoins in order for adoption to take place. In fact, we will actually see the opposite happen as clear regulation comes into effect. There will be a great purge as retail runs to utility when they constantly get wrecked, losing 70 to 99% of their income in newer projects that have no utility, that are just going to launch, pump up really quick, and then crash really fast. We even saw it happen with Donald Trump's meme coin. This thing pumped up to a $70 billion fully diluted valuation to $75, and now it's down over 80%. This attributed to a lot of the on-chain volume. Now, does that mean adoption's taking place? No, it just means a lot of people got wrecked. Now, it doesn't mean you can't make money on projects that do this. You just have to know how to get in early and when to take profits. Because then we see the great rotation take place, or the great migration to other projects. For example, then Melania launched and money rotated out of Trump into this. And look at this project. This thing's down 94%. Then we saw Libra launch and it dropped over 97%. So the more that this happens and the more that people get rugged, the more pissed off they're going to be, and they're going to run over to utility. And it's happening as you read this. So nobody can deny that XRP Ledger's on-chain numbers look smaller. They look bad at first glance on surface level, but let's not confuse on-chain data as true adoption because they're just public ledger snapshots. It's mostly retail noise. And where the real action is and where it's been happening is on private ledgers and through OTC deals, specifically with XRP. For example, Brad Garlinghouse has confirmed that Ripple has partnered with various central banks over in the UAE, Bhutan, Colombia, etc. to test the XRP ledger privately, as noted in 2023 and 2024 interviews.
It does work with a number of central banks around the world. We publicly announced some of them. And we're in the phase of kind of testing, experimenting, and they're issuing their central bank issued digital currencies on the XRP ledger.
So now we need to talk about what is going to drive real world adoption, not just casino trading from people that are coming in to speculate or to gamble. That would be the XRP Ledger's main value proposition, to provide a fast, low-cost, decentralized ledger for facilitating transactions, primarily supporting use cases like cross-border payments for financial institutions such as banks and payment providers, rather than focusing specifically on retail altcoin traders who want to gamble in the meme coin casino. Now, they do have the thing like First Ledger, and XRP has been expanding in the DeFi space and in the DEX space, but not nearly as much as Solana or Ethereum or BNB, because those chains have been driving higher on-chain volume because their value propositions focus on scalable, programmable blockchains for DeFi, decentralized finance, non-fungible tokens, and trading, attracting retail and developer ecosystems that churn out visible transactions like swaps and mints on-chain. So Ripple's main target market is different. They have openly announced that they have partnered with banks like Santander, Bank of America, Standard Chartered, PNC Bank, American Express, HSBC, DBS Bank, Royal Bank of Canada, Westpac Banking Corporation, Canadian Imperial Bank of Commerce, and tons of others that they haven't disclosed yet because they're most likely on non-disclosure agreements. So these banks collectively handle tens of billions of dollars daily in overseas flows. For example, HSBC is roughly 10 to 15 billion. Bank of America is about 5 to 10 billion. Santander is about 1 billion. So a conservative total for, 15 of these banks might range from like 30 to 50 billion dollars daily, based on their size and market data like Swift's $5 to $10 trillion daily global volume. So this doesn't include all of Ripple's partnerships. And these institutions use RippleNet and private ledgers for high-value, low-cost cross-border transfers. So it is tricky because public data on-chain tying XRP usage to these banks' daily flows isn't fully available on-chain yet because RippleNet offers two main flavors. That would be payment messaging like Swift and on-demand liquidity, which uses XRP as a bridge currency. So banks, they favor OTC, which is over-the-counter deals, and private ledgers where big XRP moves happen off exchanges and they don't cleanly show up in public on-chain data through xrpscan.com/metrics. If you guys go to metrics at the top, you can go to aggregate or you can go to transaction types and you can look up these transactions for yourself to verify here because it might vary depending on when you're looking at this. For example, you can see payments right here went from 885,000 on the 27th of February and now 28th is getting marked in at 43,000. So it's a brand new day because this is tracking a few hours ahead of where I'm at right now because I'm on Eastern Standard Time. But case in point is the OTC data doesn't cleanly show up on these charts. So example, a bank that wants to do a $500 million OTC deal might show as one quiet transfer of XRP, but it's not going to show as buy or sell volume. And how I know this is because I have worked on brokering OTC deals for massive whales that hold lots of crypto. We're talking about billions of dollars. And they might get something like Bitcoin in exchange for USDT on Ethereum, so they transfer it across the Ethereum chain, or they might transfer it from US dollar in their bank account. So you don't get to see that on the XRP ledger in terms of stablecoin transfers. So BNB's $4.4 billion, Solana's $10 billion, and Ethereum's $40 billion stablecoin churn is retail heavy. The XRP ledger targets $1.8 trillion in Nostro Vostro cash, tokenized real-world assets, the FX markets, and CBDCs, which is serious utility over altcoin bloat and dilution. So we're talking about completely different beasts here because banks may use private ledgers, which Ripple's technology allows, and public on-chain volume could dip when retail adoption grows off-chain through NDAs, non-disclosure agreements, where the vast majority of retail investors don't even see what's truly going on behind closed doors. So if you go to this document right here, I'll leave in the link in the description below, and you see page 5 in this remedies and final judgment document, In the Ripple versus SEC lawsuit here, you can see right here at the bottom of the page where it says institutional sales buyers gave Ripple massive amounts of money between 2013 to 2020 for XRP OTC. And according to Ripple, they involved more than 1,700 relevant contracts for OTC XRP sales to institutional buyers. So this includes banks, CEOs of massive companies from 2013 to 2020, most likely under NDAs for a lot of them, driving adoption invisible on-chain for the XRP ledger data. Also, Ripple CTO David Schwartz, aka Joel Katz here on Twitter, who used to work for the National Security Agency, the NSA, said that the value of XRP on the private ledger will be worth the same amount on the public ledger, but he didn't say when.
The question is, will the value of XRP be the same in the private ledgers as it is on the public?
Yes. The value proposition of XRP is that it has these liquidity pools. If it doesn't make sense to isolate something, like there's no place where gold is worth twice as much as it is now, because if there was, people would just bring gold there and they would buy gold somewhere else and they would sell it there. Unless the only way that you can have the value be very different in two places is if there's a lot of friction. And if there's friction, someone will make a business of removing that friction. So I don't see any realistic scenario where XRP has significantly different value unless something's wrong. So like a good example of a case, there was a time where the value of XRP, they called it the kimchi premium, right? Where the value of XRP in some Asian countries was very high, but that was because there were capital controls, right? That was because things were bad. I think that's a sign that something is not going well. The value proposition of XRP is that you can take it to all of the places, right? If I sell you some gold and you say, hey, this gold can only be used in jewelry, you're like, well, that kind of sucks. I don't want that gold, right? The value proposition of gold is that you have access to the entire value proposition of gold. And so I don't see any scenario in which where it makes sense to snip pieces off, again, unless something is wrong.
Now, if you guys listen to that closely, he also said, unless something is wrong, and he referenced capital controls. Now, capital controls are government restrictions on the movement of money or financial assets across borders designed to stabilize economies, protect currencies, and manage crises. So are there capital controls right now? The answer is yes in a few countries, but banks overall, they just limit the money in the amount that you can put into the crypto market or the amount that you can send. If you guys have never sent a wire transfer of over $100,000, then you have to have a little device like this that's an RSA device that basically verifies your identity. So if you're sending a lot of money, whether it be through Wells Fargo, Chase Bank, they just have capital controls on how much you can send. So with more money comes more problems. They also don't communicate well with each other. This is why they are all switching to the ISO 20022 messaging standard by the end of 2025. And if you go to the Federal Reserve Service official website right here, they adjusted the date for the single day implementation of the ISO 20022 messaging format for their Fedwire fund service in the United States to July 14th, 2025. So it's going to replace essentially all the messages with ISO 222 messages within banks.
Many people are using cryptos just to buy and sell and make quick gains out of it. Does it hurt the growth of cryptocurrencies, that usage for a quick buck?
So I mean, it's kind of chicken and egg. You have to create a marketplace. And right now we have about 150, 200 exchanges around the world that trade in XRP. A lot of it, as you say, is very shallow trading by individuals. And that is not the use case that we are pursuing. What we are pursuing is the use of XRP as a financial asset by sophisticated institutions as a bridging mechanism. So does this hurt or harm? Well, it creates a lot of noise. And, we certainly don't want that much noise. But we're waiting. And for example, this last quarter, the bulk of XRP sales were to institutional investors. And as this transitions away from retail to institutions who start to use it for wholesale, financial usage, that's when the turning point will come.
Now, what the ISO 20022 messaging standard has to do with crypto is so these certain cryptocurrencies that are compliant with this standard will allow them to be seamlessly integrated with existing and future financial systems, making them more accessible and easier to use, easier to buy, with greater transparency, as the transactions will be immutably recorded on the blockchain, reducing the risk of fraud, money laundering, wash trading, you name it. And so while the ISO 20022 messaging standard is not specific to cryptocurrencies, the standard is already being integrated within the global monetary system for banks to communicate directly with each other, to be able to allow the adoption of blockchain technology. And many people are dubbing this the new quantum financial system. So the main question is, which cryptocurrencies are ISO compatible? Well, XRP is one of them, XLM, ADA, HBAR, Algorand, XDC, Quant. And if you guys want to comment in the description below which one you're the most bullish on, and there are a few others as well too, but I do hold these in my portfolio. Now, quick financial disclaimer, I'm not going to give you financial advice. I'm not going to tell you to buy or sell anything. I'm just going to provide you with the data because these videos are purely for educational, informational purposes only. So go consult a financial advisor because you could definitely lose money in these markets, even holding any of these cryptocurrencies because of volatility, global liquidity, what the Federal Reserve is doing with their interest rates, macro market news that we're going to cover on this channel daily when you subscribe and you like this video. So we're in for a roller coaster over the next 12 months, so buckle up because the biggest control was the SEC's reign of terror over the industry, suppressing XRP for years, and that's coming to an end. And now we see them dropping their lawsuits left and right, with Coinbase's lawsuit just being dropped, recently Uniswap as well too, now Consensus. And if you guys follow us on Twitter at BULLRUNNERS HQ, we're just going to keep posting the updates as they come. Because Ripple versus the SEC lawsuit is next to end, and it will be a battle scar of the past that the XRP army will never forget. Those of you guys that have stayed tuned in over the past 4 years that have held through thick and thin, I personally believe the wait will be worth it, and countless XRP ETFs are waiting approval under a new SEC chair as well. As institutional demand for XRP products continue to increase, according to Ripple's XRP market report for Q4 of 2024, WisdomTree CoinShares filed an S1 spot XRP ETF, joining 3 other ETF issuers, including Bitwise, Canary Capital, 21 Shares. And I think there's been a few others since then because we're already in February of 2025. So once they update Q1 of 2025, we're going to see this XRP market report. And on January 15th, the SEC filed its opening brief in its appeal. And as expected, their appeal was a rehash of arguments that have already failed in court. And Ripple requested the SEC to postpone the filing of their opening brief considering the forthcoming leadership changes at the SEC, but they refused. So in terms of the next steps for the lawsuit, Ripple will just formally respond to the brief by April 16th, and they just look forward to working with the new SEC leadership. So if this lawsuit doesn't get dropped before then that's just more bullish catalyst for XRP holders. Now, the argument that Ripple unlocks 1 billion XRP from escrow on the first of the month since 2017, selling roughly like 200 to 300 million, and then relocking the rest, historically, this has had a muted effect on the price. Dips and pumps follow M2, which is global liquidity and market trends more closely, not escrow unlocks. And just the fact to back this up is, look at XRP's market cap. It's at $126 billion, and it's still up there. It's at number 4, which is technically number 2, the second altcoin, because USDT doesn't count. It's a stable coin. So if the escrow unlocks were that bad to suppress the price of XRP, XRP would be out of the top 10, and its market cap wouldn't be where it is right now. So this just shows that institutional demand outshines 99% of retail noise, because even while the lawsuit was going on, I said this probably 100 times, XRP stayed in the top 10. So while meme coin casinos crash, XRP is holding up very, very well. And in Q3 and 4 of this year, we will see the real value of the ISO compatible projects as banks move trillions daily through the new ISO messaging standard. So let me know your guys' thoughts. Do you think XRP has a future? Do you think it's going to take the world by storm? Or do you think it's all just a bunch of hype, a bunch of smoke and mirrors? I want to hear from you. Drop a comment on BULLRUNNERS HQ or leave it in the description of this video. Share this with a friend if you got value from this video. And also, I think there's tons of money to be made in the crypto market in lots of these layer 1 projects if you spot them early, but you have to know exactly what to look for. For example,
our team even said Solana is most likely to be one of the easiest trades next year, and this was posted December 29th, 2022, on the day that Solana bottomed out at around $8. And since then, Solana looks like it's up over 2,500%. That's a 25x. It's like turning $1,000 into over $25,000. The list goes on and on and on. Our team called Sui, Ondo, and even some of the biggest cult-based meme coins like MOG back in July 20th of 2023, the day that MOG launched. So if you want to learn how our team is finding these altcoins before they explode, we just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University through the link below. And although we make no guarantees because crypto is definitely risky, guys, this is only $97 a month or $970 a year. If you want to save $194, getting 2 months for free and unlock some exclusive bonuses, just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers to help you become the first millionaire in your family tree, if that's a goal of yours. And you can get started through the link in the description below right now, or you can go to bullrunners.com to take advantage of the bonuses we're giving you before they expire. Everyone is loving the community. They're loving the education. They're getting access to real-time altcoin picks first before we ever make videos about them. So click the link in the description below, watch the video, and I'll see you on the inside.